Adani Enterprises has announced the largest ever FPO thus far, an FPO of 20,000 crores, at least the intention to raise money of to the tune of 20,000 crores via follow-on public offer, which would make it the largest FPO, of course. And therefore, it deserves this conversation with two experts that I love talking to. Sudeep Bandopadhyay and Deven Choksey join in to try and tell us what would this mean for Adani Enterprises, the listed entity, and if anything for the group as well. Gentlemen, both of you, thanks so much for joining in. Either of you, the intention to raise this money was anyways announced a few days back. Does the sum of money announced take you by surprise or not really?
Not really, Neeraj. I think the way the Adani Enterprises and its subsidiaries have been growing, the way they have been going about investing in newer businesses, acquiring businesses, I think the parent company, the holding company, does need to raise a lot of capital. There has been a lot of rumors, talks about unsustainable debt levels in the balance sheet and things like that. So this is absolutely the step in the right direction. This will, as you said, will be the largest FPO as far as Indian capital markets is concerned. Yes, this was absolutely off the cards. It doesn't surprise us. Yeah, of course, the size is humongous, and we'll have to see how this progresses. But I'm pretty confident that this will go through, and they will be in a better position.
Okay. Deven, what's your sense about the FPO and what would this mean for Adani Enterprises? Because while there has, as Sudeep rightly said, that there have been constant chatter about the debt levels, the group by itself in various responses has said that their debt levels, according to them, have been comfortable as well. So what would this mean in terms of serviceability? And I'll get to those numbers as well, irrespective of what the group has said. By the way, viewer standard disclosure, Adani Enterprises is in the process of acquiring 49% in Quintillion Business Media, which owns BQ Prime, the platform that you're watching this on. Having said that, Deven, your response.
Yeah, Neeraj, I think on 5% of the total market capitalization is being basically, I think, asked for in form of FPO money. So I think not a big deal, I guess. I think it's possible. At the same time, I think the promoters holding in the company is significantly on a larger side, upwards of 70%. I would think that I think this is possible for them to dilute, I think, that much of equity for sure. The total equity net worth, I think, that you look at is around 37,000 crore as per the last balance sheet numbers reported. So once again, I think 20,000 crore out of that, I think, is not a big deal once again. If you look at the kind of business portfolios that they have, that's where possibly I think it would make more sense. I think on one side, you have got the energy and utility portfolio. Then you have a transportation portfolio in which you have roads and airports kind of infrastructure assets. Digital portfolio wherein data center as well as I think the new digital app, I think, which is now coming up. And I think the petrochemical complex, I think, which is coming up with PVC, water management systems, and I think so and so forth. So even mining for that matter. So each and every business portfolios that they have been incubating in Adani Enterprise would at some point of time would become a separate company as the precedences are available for the rest of the business. I would think that I think this particular sum of money will be largely deployed towards a new generation of business. I think where probably they would require significantly large amount of capital that would include digital as well.
Yeah, Sudeep, come in, because while as you said, some portions of the market might have been presumptuous in thinking that the capital raise will improve the debt equity, and to an extent it does, because the denominator kind of gets expanded in that fashion. But the last reported numbers of debt of 20,000 crores in FY22, or the response to credit insights for the net debt number of 28,000 crores that the group put out, if the money gets utilized for investing and expanding the newer businesses, does the debt equity situation in any fashion worry you? Or the debt to EBITDA, net debt to EBITDA, which was at 4.5 odd times, does that in any fashion remain a concern, or you reckon that the cash flows from the businesses as the businesses mature would take care of it?
Neeraj, 2 points here. I think cash is fungible. Now, once they raise the money, whether they use it for reducing debt or putting in the new business, I think pretty much the same. because as Deven Bhai just mentioned, they are into businesses which require a lot of investments even from here on. So that money has to come, whether that money comes out of this FPO proceeds or they go and borrow after repaying the old debt. It's pretty much the same thing. Now, to the question of your sustainability of the debt levels at which the balance sheet is operating, of course, on the prima facie, it looks huge debt. And unless the cash flows are robust and the underlying businesses are producing results, and that too pretty fast, it can lead to a lot of problems. Now, the question is, the businesses they have in Adani Enterprises, are they going to produce money? Are they going to throw cash, or they going to guzzle cash? We had seen this getting played out in corporate India in earlier cases where promoters, being optimistic about their businesses, have gone and borrowed heavily, and later, because something went wrong, got into bigger problems. Now, we hope that kind of thing doesn't happen. And some of the businesses obviously have already started giving cash. So the cash flow is not bad, but I think cash flow needs to improve significantly from here on to ensure that that kind of level of debt is sustained. Now, I may just add here what I read in the news reports is that apart from this FPO, they're also talking about raising money from foreign sovereign debt funds and sovereign funds and other institutions. So probably
which hasn't been announced though. Today's announcement just leaves it at the.
But that's rumored, Neeraj. So
Sure.
I think the point I'm trying to make is they need to do more. Considering the the gamut of activities they plan to do and plan to invest in, they need to do more of such fundraising, which is not an interest-bearing fund.
But which is my question, Sudeep. Sorry. So Deven mentioned this, right? That he believes that the money will be used to invest in some of these new age businesses which require the cash. Presuming that that is where the money gets invested in, and there is visibility around what could happen over the course of the next 2-3 years. Are you comfortable with how things are moving in terms of the debt equity or the serviceability? Because different people have different thoughts here. Just trying to get your sense.
My point is, this is a step in the right direction, and I'm very clear they need to do much more.
Got it. Deven, coming on this part also, from a perspective of what Sudeep mentioned, that I mean, the talk was that they'll do multiple things. Right now, they've announced the FPO. You reckon more is in store? Is more needed? Part one. And part two, are you comfortable with your assumptions on the future cash flows for the serviceability of the debt that they have on the books?
So I'll deal with the second question first, and probably I would like to say that in any infrastructure business, I think the most challenging time is the time till the time they start generating cash. Moment infrastructure business starts generating cash, I think you're home. Largely because of the fact that I think thereafter every rupee of revenue that you generate is resulting into almost equivalent amount of the EBITDA. As the case goes, I think in the business of say for example solar energy, as the case goes, I think the business of even transmission, and even the port business, which would account for around 65 to 70% kind of an EBITDA. So in my viewpoint, I think as once the cash generation activity starts, the lenders become more comfortable in even further leveraging your assets. And that is where I think this infrastructure story rides success. In case of Adani, yes, I do agree that in first 10 years or 15 years, probably the challenge was significant because at that time they were building the infrastructure business. But if you look at for last 3 to 5 years, I think each of these businesses have significantly started generating cash. That is more important. Second most important point is that the assets are already created. So definitely, I think the lender is more comfortable at this point of time with their operating assets. And the last but not least, I think the expansion of this particular business now happens through the existing cash flow and further leveraging on the existing assets. So to a greater extent, I think you are mitigating by design the risk element part of the debt within this particular thing. Yes, I do remain concerned on one aspect that I think if the speed is faster and if the projects get delayed, then possibility of I think you getting derailed at some point of time could be very high. But as of now, it does not look like. I think most of the projects are on stream and probably are very systematically getting executed, including the newer segment of material segment as well. I believe that I think they are very much on the track as far as delivery aspect is concerned for these projects.
So Deven, I'll wrap up with the final two questions to both of you. I'll come to you first, Deven. Sudeep mentioned that he believed that the FPO would go through. The stock has had a heady run. It's prior to the inclusion in the index itself, it's had a move and then it's kind of sustained there. You reckon the FPO has a good chance of, it's a large one, getting through comfortably?
So kind of assets that FPO will definitely get through comfortably, because I think the size of investors looking at India from investment perspective, I think they get probably one of the best proxy in form of Adani Enterprise today, because of I think the kind of the infrastructure assets that they've built and they're building. So from that point of view, I think they become the finest proxy as far as entering into India, and I don't see too much of a problem. In fact, I think I would have been worried had they gone with I think a smaller portion of FPO. Probably I think would not have attracted some of the larger funds. Today, I think 20,000 crore is I think hardly $2.5 billion, and I think the appetite of some of the global funds is so very high that I think they would probably look for to have such kind of the product into the market. And other aspect I think which probably I think is more important, in which I alluded saying, you are already having operating assets. So any new investors walking in at this point of time, for him it becomes an attractive proposition because the cash generation is already there, and you are further augmenting the cash generation by way of I think putting the additional money into some of the newer assets. So from that point of view, I would think that I think the business would probably attract I think investors. Last but not the least, the pattern goes, I think earlier also they have demerged after incubating all the businesses into separate companies, and they have ended up getting significant amount of capital appreciation for investors. So that history is known to most of the new investors who are putting money or who are likely to put money to this FPO. They're likely to see the capital appreciation from this particular asset, given the design which is already in place from Adani Enterprise. So I don't see too much of a problem on that particular aspect.
Yeah, I think I was reading a note, saved from Wilmar, a bunch of other businesses which are large enough under that umbrella, yet to be listed. And if they follow the template that they have thus far, no reason to doubt what Deven was saying. Sudeep, one final question. What would this mean from a group sentiment perspective as well? Because like you said, while the group itself has always said that they are comfortable on the debt serviceability and it's not been an issue, on multiple counts, they have given that response as well. What's your sense on what does this mean? Because like you said, the chatter around the debt levels is high. They've done this FPO. They've announced this FPO with a presumption that it goes through, that you and Deven pointed out. What would it mean at a group level?
Well, I think it will go through definitely with flying colors. B, I think it brings a lot of confidence as far as the group is concerned. And I would point out one more fact, that diversification of shareholding was one of the other points which was being talked about. With this 20,000 crore FPO, we will definitely get to see a bit of diversification of the shareholding as far as the Adani Enterprises is concerned. Actually, that's also very good news. Because the more and more diverse and global investors get in, the other investors do get more and more confidence. So I think that is going to happen, and that definitely is a big positive news for the group.
Got it. Gentlemen, both of you, thank you so much for joining us and giving us your thoughts on this large fundraise. Viewers, it becomes important because it's the largest ever FPO in India thus far, and therefore an important perspective on a nifty company. Sudeep, Deven, much appreciate your time. And before I end, the standard disclosure once again, the Adani Enterprises or the Adani Group is in the process of acquiring 49% stake in BQ Quintillion Business Media, which owns BQ Prime, the platform that you're watching. Viewers, thanks so much for tuning in.